In this presentation, we will create a sales receipt within QuickBooks Pro 2020, QuickBooks Desktop 2020. In other words, we will be creating the data input form that will be related to a transaction where a customer has purchased something, and we have received the payment for that purchase at the same point in time. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View drop-down up top and going to the Open Windows list. We're currently in the home page. We are going to be concentrating in on the Create Sales Receipt item, the Create Sales Receipt. You'll notice when we think about the Create Sales Receipts with regards to the flowchart here, it's way up here in the flowchart as compared to the invoice. In other words, the invoice and the Create Sales Receipt are very similar in nature. They're going to be forms that record the increase in income due to us doing whatever we do in order to generate revenue, whether that be a service type item or selling inventory. The difference between these two items then is the Create Invoice is when we bill the client and expect, you can imagine, to receive a payment in the mail. We send out the invoice, which is in essence us billing somebody else. We expect then to receive the money in the mail. Therefore, the other side of the account here that will be increasing is accounts receivable. Invoice means, for QuickBooks, accounts receivable will be increasing. Whereas over here with the Create Sales Receipt, we're saying that we got paid at the same point in time. Revenue still going up. However, the other side of it is going to be some kind of cash type of account. In our case, undeposited funds will be increasing. So that means that if you look at the flowchart, we're basically cutting out these first two steps. We're not doing the invoice and the receive payment. If we did, we would basically get to the same point as the Create Sales Receipt. In other words, if we made the invoice, increase the accounts receivable, increase sales, and then we receive payment, decreasing the accounts receivable and recording the undeposited funds that will then be deposited, we get to that same point in one step. With the Create Sales Receipt, simply increasing the cash or undeposited funds and the other side going to increasing the sales. This is also the document you want to think of if you're like doing a cash register type transaction. You're saying, hey, we can imagine ourselves, in our case, in the store. Someone picks up a guitar, says they want this guitar. They bring it up to the front of the desk. We have the Create Sales Receipt all set up for them that we can then just simply populate. Now, as we do so, you can also imagine that the person at the checkout stand may not be the person that knows the most about QuickBooks. That's okay. And all they have to do is populate the sales receipt in a very simple fashion. Why? Because we've already set up the lists. We've already set up the items that will be recorded within them. And we already know what's going to happen in terms of the financial statements. The person who does the data input doesn't need to know that. We need to know that to set up the information. Let's consider the major forms that we will be taking a look at as we create and enter this data. We're going to go to the reports up top. We're going to go to the company and financial. We'll then go down to the balance sheet. Let's take a look at the balance sheet first. And we're going to change the dates. I'm going to change the dates up type in the customize field. Date range is going to be from 01/01/20 to 12/31/20. January 1st to December 31st, 2020, the year that we will be working on. Here is our balance sheet. As we enter the sales receipt, we would expect not cash, but undeposited funds to increase. Same reasoning as when we entered the receive payment, that being that we want to group all the cash. If we imagine ourselves getting money in the cash register, we want to group all that cash together and then go to the bank with it, grouping it together in one deposit, making the deposit match what will be on the bank statement, making the bank reconciliation process easy. This, in essence, is a cash account. It's down here for QuickBooks because QuickBooks doesn't need to format it as it does for like a checking account. But this is cash. You can imagine cash being in the register or checks that we have not yet deposited. So then let's take a look at the profit and loss reports up top. Company financial, we'll then go to the profit and loss report. Changing the date range from 01/01/20 to 12/31/20. That's January 1st to December 31st, 2020. What's going to happen on this side? Sales are going to be increasing. That's going to be the other side of the transaction. Now, also note that if we have inventory involved, if it was a service item, that's all that would happen. If we had inventory involved, we also have this other side of the transaction as we did with the invoice as well. That being, jumping back to the balance sheet over here, that the inventory would then go down And as the inventory goes down, because we consumed it, we used it, we gave it away to generate revenue, we record the expense called cost of goods sold, which would increase. So that's going to be the accounts that will be affected. I want to open one other report that you may want to get used to using so you can see everything in one place, that being under reports, under accounting and taxes, and the trial balance. The trial balance, another useful report, underutilized. We're going to say 01/01/20 to 12/31/20, and we can see this in a more condensed fashion. Go into the Home tab in the Open Windows now. Within the Home tab, we then are going to go straight to the Create Sales Receipt and then go to the Deposit. As you do this, imagine you're in the store. Someone picked up this guitar, which is going to be, for us, it's going to be an Epiphone semi-hollow wood, and they just say, I want this guitar. And we're going to say, okay, we don't need to invoice them. We just need to give you your receipt, pay us the money. We give you your receipt. Here's how we create the receipt, sales receipt, which will, of course, generate the transaction. It should look very similar to an invoice, except, of course, the name being the sales receipt. We're going to be saying this is going to go to String Guitar is our customer. We don't have them set up yet. I could say add new. I like to just type in here String Music is who that's going to be our new customer. And so I'm going to say tab, and we're going to quick add that customer. Once again, we would probably want to populate all the data, but we've seen that before. I don't want to bore you with it again. So we're just going to simply quick add it. This is all we need in order to get the transaction completed. We're going to say that we got cash for it this time. I'm just simply tabbing through this. I want to put this on the 6th now, or the 16th. We're currently on the 12th. I'm going to select the plus button on the keyboard a few times as it creeps up to number 6 or 16. And then we have the sales number. I'm going to keep that at 1. Sold to String Music, keeping that. I'm going to keep I'm not going to put in a check number because we have cash here. And then we need an Epiphone semi-hollow wood. Now you'll recall the items are already set up. And so all we have to do to data input this is select the proper item, which should be labeled on the guitar. They brought the guitar up. We are the check register. I don't know anything. I'm just data inputting this information and collecting money. We already know the guitar number, and it's going to be an Epiphone. I'm going to select the drop down. It's an Epiphone semi-hollow wood, or an EPSH is what we called it. All right. So it populates for us here. And everything's all set to go. That's all we need to do for the data input. Now, how does it know what this 400 is? Well, and how would it know what the other side of it would be, the cost of goods sold? To think about, we'd have to go to the lists to get that. Let's think about that real quick. What's going to be the transaction? As I do the data input, I don't need to know the transaction, of course. I just need to collect the money. But when we set up the information, we need to know it. And when we analyze the financial statements, we need to know what's going on with a sales receipt. Well, with a sales receipt, that means that we're going to receive some type of payment. So some type of payment format's going to be going up. In our case, it's going to go to the undeposited funds account. The undeposited funds account. Now, if you do not want to use the undeposited funds account, I do recommend using it as a reference, that's the preferred method here, because it'll help you to group the deposits together properly. But if you don't want to use it, you can go to the Edit tab, Preferences. You can go to the payments, and you can turn off the use undeposited funds as the default deposit account. I'm going to close that back out. So it's going to be increasing then the undeposited funds. The other side is going to be going to revenue. Now it's going to be increasing the undeposited funds by the 420. It's going to be increasing revenue by the 400, the amount we charged. The difference between the two being, of course, the sales tax of the $20 that we're charging here for sales tax. Also, you're going to have the inventory going down by some number, not on the sales receipt, because we don't want to give the cost to the customer. However, we want the sales receipt to drive the transaction within the QuickBooks system. And the other side, inventory will be going down and cost of goods sold will be going up. Where would we get those numbers? We would go to the lists here, item lists. This was an Epiphone semi-hollow wood, and this is where we set up the items. This is how we made it easy to populate the sales receipt. We have the cost of goods sold account, and the sales price. Sales price is the only thing we see. Cost will bring down the inventory amount as the asset and record the other side to cost of goods sold. Closing this back out. We're then in the sales receipt. Let's go ahead and record it, see if it does what we just said it should do. We're going to go save and close. And then let's take a look at the balance sheet. Within the balance sheet, We're going to say that the undeposited funds should be going up again. We really need to go to the bank. We have a lot of money on hand here. Someone's going to rob us. This isn't not good. But in any case, we're going to double click on that. We have the undeposited funds should be increasing by another 420. The other side is going to be split because there's multiple accounts involved. Double clicking on that, you're going to see the sales receipt. It went up by the 420. The other side is going to be to sales. So closing this back out, closing this out. That's going to be on the profit and loss report. Profit and loss report. Merchandise sales should be increasing. Here it is. Let's increase the profit and loss report, or double click on the profit and loss report. There's the other side, but it's only for the 400. Double clicking on it. That's the amount we charged, not including the sales tax. The difference of sales tax, being $20, is what we owe to the government. Where's that going to go? Closing this back out, closing this back out. It's going to be on the balance sheet. It's going to be a liability that we owe to the government. So it's going to be a sales tax liability. Within that 59, we got to add this up as we go through the month that we will then pay to whoever we have to pay sales tax to. So that's the $20 here for the sales tax. Closing this back out, that's not quite it yet, because also we had to decrease the inventory. So that form also decreases inventory. Inventory's up top here. I just minimized it. Here's the inventory. Double clicking on that, we could see that the inventory then is going to be going down. And we sold to String Music, I believe it was. No, we sold to, yeah, that's right. It's a sales receipt. I was doubting myself there. 320. Now the 320 is not on this form. It's not on this form because we don't want to give that to the customer, but the form is driving the 320 that is being recorded. It's being recorded because of this sales receipt, even though we don't see the 320 on it. Closing this back out. The other side then going to the profit and loss under cost of goods sold. Cost of goods sold, double clicking on that. Then we see the other side, which is going to be the 320 here. Once again, 320 not on the sales receipt. However, sales receipt is generating the 320. Closing this back out. Closing this back out. Back to the balance sheet. Note that we decreased the inventory. That's at 190,1944. The supporting document, going to the reports up top, under inventory. Let's go to the inventory valuation detail this time. Date range 01/01/20 to 12/31/20. We see then that we have the detail here related to the Epiphone semi-hollow wood for String Music and for the 320. If we want to tie this out to the balance sheet, we're going to go to the reports. We're going to go to the inventory. We're going to go to the inventory valuation summary. And that's going to be at 12/31/20. And the cost column, the 1944, not the retail price, what we sell them for, is what will be on the balance sheet. 1944, balance sheet 1944. Note that if you get used to the trial balance, if we go to the trial balance in the open windows, it might be easier for you to navigate and go into those accounts from one screen. If you get used to looking at the trial balance, you can see all those accounts here and go use the auto zoom as needed with just simply that one report. All right, we're going to do this again, but now with just service items instead of the inventory items. I'm going to close these inventory items over here, these reports. I'm going to close this report, and I'm going to close this inventory report. I'm going to keep the other reports open. And so I have the trial balance, balance sheet, profit and loss. I'm going to go back to the home tab. We're going to do this again. We're going to create a sales receipt, however, this time using service items instead of inventory items. So we're going to say that we created, or we did a guitar service for a new client. It's going to be called Sam the Guitar Man. Sam the Guitar Man. He's got a catchy name. Sam the Guitar Man. All right. So there we have it. Hopefully we spelled it right. We try not to misspell our customers' names because they can be a little touchy sometimes on that. And we want to give them our newsletter and not mess it up. So in any case, we got the we're going to add it with the quick add. And then we'll go through this and we'll say that we're going to say it's cash that was received. We're going to keep it on the 16th. I'm just tabbing through this form. I would recommend getting used to tabbing through the form. We're going to keep all this as it is. Now, we're going to have a diagnostic on the guitar. And I know it sounds like maybe that's a car thing, but yeah, we're diagnosticing the guitar. And so it's a diagnostic. That's the item name. And that costs $68. And we have one of those that we're performing. It's a non-tax item. You'll note it populates by itself. We don't need to do anything else here. Why? Because we set up the items properly. So it's a non-tax item. We don't have any tax down here. The other non-tax item is simply hourly service. So we say, hey, we do a diagnostic. We have a set fee for that. It doesn't no matter how much time it takes. We're going to charge you $68. We charge by the item there. But we also do this whatever the other thing you want us to do. We're making tabs for you. We're making whatever, tablatures or something. That we're going to charge you on an hourly service because that's so we're going to say this is going to be an hourly service, and we're going to say that just took us simply 1 hour, and there we have that. This will be a service item. So if we think about this type of transaction, what's going to happen? Very similar to the other sales receipt. However, we don't have to deal with inventory. Therefore, what's going to happen? We're going to have the undeposited funds will be increasing because the sales receipt default will always be increasing undeposited funds unless you change the default settings within QuickBooks. The other side then is going to be going to revenue, however, not merchandise revenue, just service revenue. And that's going to be basically, that's the transaction. We don't have to deal with sales tax and we don't have to deal with inventory tracking, which is nice. So we're just going to say save and close. And let's go check that out, see if it does what we just thought it should do. We're going to go back over here to the balance sheet in the open windows. Within the balance sheet, we have the undeposited funds. So down here in the undeposited funds, which we really need to go to the bank and deposit at this point because we're kind of holding on to the cash at this point. And so we're going to double click on that. And we got within the undeposited funds, the 208, And there, if we double click on that, is the sales receipt. Closing this back out. The other side then going to the profit and loss, like the income statement type report. It is in the income section. Notice we have it going to a different income type. This being, we're simply calling it service income. You can call it different names, whatever you would like to call it, but it should be within the income section. And we want to break out the inventory items that we're selling typically, or the things that we sold that are inventory related versus the service items. Going into that service item, we now see that we have, notice it's breaking out the same invoice into the two subcategories that we put in there, the diagnostic and hourly service, the 68 and the 140, which we see here, the 68 and the 140 for the diagnostic and the hourly service. So I'm going to close this back out and close this back out. And we don't have anything to do then with the cost of goods sold or inventory. Service companies are a lot easier in that way if we do not have to track the inventory. Fairly straightforward transaction.